We're good to go. So first things first, as always, what do we want to check at the beginning of the week is our news, right? Before anything is just understand what you got going on. We have Euro news, lightly Euro news, nothing crazy. This tonight we got more Euro news. Then we have 4:30 in the morning, we got red folder GBP news. 9:45 in the morning, we have red folder USD news. Tomorrow NZD news in the afternoon. Just going over the whole week real quick. We always revisit it every day, but just getting an overall overview of what's going to be volatile this week. Wednesday, we got CAD news. I don't think too many people trade CAD. And then what? Thursday, more USD red folder, and Friday, more USD red folder. So we got USD red folder on Thursday, Wednesday, Friday, Thursday, Tuesday. Okay, cool. All right, so let's see then. Now let's go into the charts and just see what we had going on last week again, and then just understand what's going on this week, right? What we're looking for this week at least. So looking at last week, this is where we started the week off, and then this is where we ended the week off right here. So this is almost like it almost pretty much ended in the same spot that it started at, right? It went bullish, then it went bearish, and then it pretty much went sideways for the week, right? So like I told you guys before, the whole point of trading isn't the whole point of trading isn't to trade every pair possible. Like you don't want to be looking at 4 or 5, even 3, 4, 5 pairs. Even over 3 pairs is being more excessive than what you should be looking at. You should have looking at the same pairs really for like the whole month, for the whole month, and then kind of just developing that habit, and you stick with those pairs because you should find some profitability in that alone. A lot of people just simply aren't profitable because they trade too many pairs. They look at too many different things, and it's too much mental capacity to take up, honestly. So the biggest thing is just shorten down your trading list, and then, like I said, just focusing on those pair specific. So as you guys seen the last couple of weeks, we've only really been talking about the dollar, GU, and EU. This is also why I tell you guys, I know a lot of people like trading other things and they have their pairs that they like to trade and whatnot, but pretty much every single, throughout the week and everything, you guys see me posting on a page, you guys see, a lot of the posts on the page, and they're often, the charts are often either, they're pretty much GU or EU every single time. So if you feel like that you're not catching profit or you're not being profitable at all, then just follow along with the same things that, we talk about on the calls every single day. And I promise you, you'll find profitability in that alone as well. So looking at the DXY, that's the first thing that you want to look at. You don't want to actually go look at EU, GU, or anything like that first, right? You want to go look at the DXY. You want to look at the DXY and understand what you have going on with the DXY, because once you establish a bias with the DXY, you'll know the overall move that you're looking for that's going to happen with EU and GU. And same with like AU, NU. I think those are all 4 of them. So like I said, it's all kind of just a preference of what you like to trade. But like I said, I would very much stick with the USD pairs because of the correlation with the DXY, and it'll make your trading life a lot much easier. I hate using the word easy with trading because nothing at the end of the day is that easy, but you can simplify it as much as possible to make it easy on yourself. Because you can make it difficult by looking at multiple pairs, looking for multiple setups and whatnot. Now, looking at the DXY, right? What do we have going on with the DXY right now? Like we said, it ended up pretty much last week at consolidation sideways, but you can find moves back and forth, which is why having your trading plan is so important. Been talking about trading plans so much. And before we actually get into the charts real quick, let's just go over the trading plan one more time because people are hopping on. But looking at the trading plan, right? You don't have to necessarily follow this to an exact T, but it's just different views. And it's in the Discord underneath the mentorship under trading plans. But the Rags to Riches plan, this has been my favorite trading plan and something that I still follow to this day. But like I said, it's just having an idea. If you start with a $300 starting balance and 1 to 2 weeks, you're using a 0.025 lot size. If you risk 20 to 25 pips a day or a setup or a day in general, you're risking about $50 a day. Your overall goal is to catch about 40 to 50 pips a day, which equals about $100 to $125. Now you want to keep the same lot size for 2 weeks. After 2 weeks, this is what your account balance could roughly be looking at. And then after 2 weeks, now you can increase your lot size because you're sitting at a larger balance and you have more equity. So now once you increase your lot size and you do the same thing, you can see what your account balance could look like after pretty much 4 weeks after a month of trading and what you started with. So once you start building on this and you go through week 4 and 6 and you go, you give yourself an actual, 2 to 3 months to follow a plan, you can see what, what it looks like after 2 months. And it's very much possible. It's just a matter of discipline. It's a matter of discipline. That's what I've been talking about. And this is even something that we might do, with the live trading group as well, and following this specific plan for 3 months. Because like I said, I mean, everybody's different. Everybody doesn't trade at the same times or whatnot all the time. But it's just a general idea of what you could be looking at and how much you're risking per trade, and just knowing your cutoff limits per day, right? Because if you have a $300 account, you really shouldn't be, I mean, you shouldn't be scared at losing $50. Like if you're scared to lose $50 a day and you put $300 in your account, you shouldn't even put $300 in your account to start off. That's just being completely honest. Like, and that's my honest opinion. Like, if you're really in your goal, this is your goal to make money, then like I said, creating a plan that works for you. If 0.25 with $300 in your account might be a little too much for you, and you don't want to lose $50 a day, then cut that in half to a 0.15, a 0.10, a 0.10, and you risk $20. When you risk 20 pips, it's $20. So, it's just a matter of, like I said, creating some type of plan and following that plan and looking at what looking at your looking at the long-term goal, and not trying to just get rich in one day. If you can make $100 a day, like I said, and you do that for 2 weeks, you'll be looking at, starting with a $300 account, looking at over $1,000 in equity. And that's off of just catching 40 pips a day, which almost everybody knows that they can do, that they can do to a certain degree. So, and it doesn't even have to be 40 pips. It can be 20 pips. It can be 25 pips. But like I said, just creating some type of plan that works for you. And how will you do this? Will also go to the extra resources, because you also need to be very aware. What's it called? You have to be very aware of your pips and what you're trading. When people trade GJ, when people trade GBP, JPY, GJ is only, and we can bring it up real quick. Let me see if it can load for us real quick. GJ does not cost as much as GU, EU. The GJ is not true to the pip. UJ is not true to the pip. EJ is not true to the pip. A lot of the pairs, a lot of pairs are not actually true to the pip. And what I mean by that is, true to a pip is $10 a pip. With a 1.0 lot size, a standard lot size, 1.0 is $10 a pip. But on certain pairs, a 1.0 does not equal $10 a pip. A 1.0 equals $7 a pip, $7.50 a pip. It equals different amounts. So your profit is going to be different as well with your as well as your losses. Even if we both risk 20 pips and you risk 20 pips on GJ and I risk 20 pips on GU, I'm going to lose more money on GU, because GU costs $10 a pip and GJ costs, where's GJ at? Let's find it. GJ is $7.74 a pip. If you guys want to look at anything real quick, type it in the chat. I'll check it out real quick for you if you want to see exactly what your pair that you trade the most costs. But like I said, this is in the Discord. These are things that you want to write down in your, in your notebook, and things that you want to know of. USD CAD, $7.48 a pip. USD JPY, $7.74 a pip. GBP USD, where's it at? Where's Euro USD? I think it's right here somewhere. Euro USD, $10 a pip. GBP Chef, $10.89 a pip. The highest paying pair per pip, NZD Chef, $10.89, is going to be Euro GBP. Where is it at? Euro GBP pays out $12.42 a pip. But now the also thing is knowing is, how many pips does my pair run a day? GJ does go for more pips a day than EU typically. So it gives and takes in in certain areas, but you have to know, like I said, what your trading plan and what you're trading, what actually 25 pips with GJ is almost the same as 20 pips with GJ or GU, because of the difference in pip price per pip. So like I said, these are just little things that matter and that you think about when you're trading, and that matter when you're risking, when you're risking. And like I said, because 20 pips with GJ can happen really fast, but it can be that 5-6 pip difference that your stop loss could have been at, that make the difference of you getting stopped out and you having a winning versus a losing trade. So I don't trade GJ no more though. Just GU and EU. I don't even bother to mess with GJ. It moves for so many pips a day and it's so volatile all the time. It's just, like I said, I'd rather First off, like it's also a lot of people only trade New York session. If you only trade New York session, you shouldn't even be looking at GJ or even thinking about GJ. Just being completely frank and being honest with you, like there should be no. You should have some type of USD in the pair that you're trading if you're only waking up for New York session. It should be some type of USD related something going on during New York. If you're not, then you're literally I mean you're shorting yourself and you're not giving yourself the real opportunity to progress. Because GBP is London and JPY is Asia. If you're only trading New York, the volatility isn't there. The market's always going to move. And like I said, that's the trick. The trick is that the market is always going to move. So what you have to be very disciplined and focused and precise of what you're doing on a day-to-day basis to, really get to where you want to be. So 12 minutes into the call, we haven't done anything on the charts, but that's fine because, like I said, I mean, it's so much that's really not about the charts because at the end of the day, if you're not waking up and you're not doing these little things, and you're just not going to be able to be consistent and be profitable, trading. And that's just, like I said, is being completely honest because your emotions are going to get the best of you and so many things take over that you can, nothing else matters. So like I said, map out that plan, write it down. Writing things down is the most important thing with this. Like if you're not taking notes on the calls, then it's, you're doing yourself a disjustice. If you're not taking notes and you're not applying those, you're doing yourself a very huge disjustice. My notebook was filled, 2, 3 notebooks filled with notes every day, writing down the same thing a lot of the times. So let's get into the chart though. Last week, like we said, the market went pretty much sideways. So now what would I do is you want to bring out your fib one to understand direction. When we're looking at direction, we're looking at the 1 hour and the 4 hour time frame. Mainly focus on the 1 hour for day trading. Like your day trading, if you know that you only trade maybe 1-2 days of the week, then maybe focus on the 4 hour too, but mainly focusing on that 1 hour time frame because that's where you're going to really see clear setups and you're going to be able to catch the move on time. If you're waiting for 4 hour candles all the time, you're going to miss a good entry on a move and you're going to be in drawdown. You're going to deal with more drawdown because your entry is not as precise as if you were looking at the 1 hour time frame and got a better entry. So, but we're looking at direction on the 1 hour and 4 hour. So if we're looking at this right now, we see that the week ended off bullish. The last move was pushed up to the upside after pushing to the downside, pushed up and then went in consolidation. So now if I'm looking at this, I pull a fib out from this low right here to this high right here. Because if we want to look for potential buys, we want to see the market drop underneath this 50%. And now our buy trigger can, our potential buy trigger will come into play. If we were looking for sales, what would you have done? You would have took your fib from this high up here to this low right here, and then drew your fib like this. So you might have already played, you would have played DXY to the downside over here because that's the stronger direction on the 1 hour time frame, right? So you see how you have, you want to have both biases. You want to have you want to have your bullish and your bearish bias because you want to understand where you're looking for buys or sells from a certain point in the market. So this is at 50% equilibrium right there. So you wouldn't even be thinking about selling until the market got back above this area. So when people ask me, about bias and why am I looking for this and why am I looking for that? It's because like I said, you want to, in a sense, have both biases and know that I'm only looking to do this in this area and I'm only looking to do that in this area. So like I said, in this, where we're at, where actually the market just got to the downside, we're at right now, is this anywhere near a sell for a fib? If you're bringing it out from your last major buy and sell points. This is nowhere near a sell fib, right? Because the sell was all the way up here. So you couldn't even really think about selling it selling the DXY from over here, from where we're at right now, because it's already too low. It's already going inside that sell play. So that's why, like I said, I would bring out that potential buy fib and looking at it like this and say, okay, let me see if this low is going to be respected or see how the market reacts here, and then I'll look for a potential buy up from this, from looking for the DXY to go into some type of bullish momentum. As we see, like we said, it's going to come probably target these lows somewhere down here. And this is when time and price comes into effect because you're not a robot. That's like I always talk about. Just because you draw a fib from here to here doesn't mean that you just get in the trade now and that, it has to play out, because we talk about it more times than not. It's not that your direction is wrong, it's that your timing is wrong. So when nobody wakes up, I'm not going to say nobody because people wake up. I know people wake up. Some people just don't say things, which is fine too. The whole point of the mentorship and the whole point of me teaching and everything is eventually for you to go do your own thing and you not need to be around and not, You can do whatever you want. Some people choose to be around still, some people don't. And I don't, honestly, I don't really mind. Like, so I don't charge people monthly for mentorship and whatnot, because everybody has different points in their journey. But I mean, at the same time, you pay for it. We have these calls so often, and they won't happen forever, right? Like, I know it's lifetime mentorship, but the calls won't happen forever. We've had over, over 100 calls last year, well over 200 calls probably, right? So at some point, like I said, I mean, I gauge things off of you guys too, because I don't accept people in mentorship anymore. I don't promote, you guys see, I don't promote mentorship anymore. You don't see new faces come in. I don't do any of those type of things. Like, my focus is this group, and if this group doesn't play out, then maybe I'll go accept one of the offers to go teach somewhere else or something. I don't know, but like I said, at the end of the day, we can have all these trainings so much, but it's the timing. If you're not actually waking up for your London kill zones between 2 and 4 o'clock, then all this that we're doing, in some sense, doesn't even mean anything, because you're not applying anything that you're learning. And you can get on these calls so much, but you're going to forget everything that we talk about when it's time to trade if you're not being consistent with trading on a day-to-day basis. And it doesn't mean that you have to trade every day, but if you're not doing your markups on a day-to-day basis, you're not even, like I said, even practicing to some degree. You're just not being consistent with being active in the trading world, and it's as simple as that. And it doesn't mean actually trading, because we don't trade a lot. We only trade at certain times. Between 2 and 4 o'clock is when we really look to start trading. And a lot of the times won't even enter a trade until 3:30 to 4 o'clock. You guys want to, like I said, I'm talking about things that have helped me be very profitable, be profitable over the last 3 years, to quit my job to trade, to do, it's like, it's discipline. It's not about how much you trade. You want to make more money, put more money in your account and trade less. By having less money in your account and trading more doesn't mean that you're going to make more money. That's not how things work. You're going to make more money by trading less and trading a lot less than what you have done before. If you've already entered 2, 3 trades before 3:30 in the morning, you're not setting yourself up for a good London session. You're not setting yourself up for, and this is 3:30 Eastern, 12:30 for my people on the West Coast, 3:30 for East Coast. And I lived on the East Coast. I know the pros and cons of both. So, and then it's coming right back for New York session. If you're trading all at 5 o'clock in the morning, 6 o'clock in the morning, 7 o'clock in the morning, you're just going to end up losing money at some point. Because when do you stop? When do you stop trading? When do you stop? When do you stop doing this? Because it's not profitable. This isn't profitable times in the market, right? But if you wait all the way until 9:30 in the morning, all the way till 9 o'clock, 9:30 in the morning every day, you're going to end up being profitable, because you're either just not going to trade and you're not going to lose any money, or you're going to see a setup that that you see, and you see it over and over, and you're going to take the trade. But that's the biggest thing, is just people, like I said, people losing money, not having a trading plan, not following your own rules. And I mean, like I said, that's what it really comes down to. We're 20 minutes into the call, and we haven't really looked at a chart, but it's not so much of the charts. Like I told you guys at the beginning, people that we just talked about it, the direction of the chart isn't the hardest thing to read. It's your timing, it's your discipline, it's your emotions, it's everything else that comes connected with the actual trading part of things. So, like I said, looking at this, I'm looking for the DXY, just explaining why I want to see it come bullish going into this week, because it's already coming from these sell fibs. It might drop down and take out this low. It can very well go and take that low out, and that's almost what we prefer at this point. Going into London, New York this week, is to see, this is our weekly low right here. There's buyers that have their buyers all in right here. Buyers got great trades. What are they doing right now? They're taking out all the people that bought in. These people took out those buyers, dropped down, taking out all these buyers, taking out all these buyers down here. So now they're going to go, and what do they want to target? They want to target these buyers, and we'll either see, a full spike, you'll see it close, hit that level, and then that's when you're going to see a strong reaction back up to the upside throughout the week. So, like I said, you want to have your full focus on this price, on this level in the market right here going into the week, because that can be your key point of where you see the market react back to. What did we see happen last week? Last week, this was Sunday open right here. What happened with Sunday open? The market came back to Sunday open multiple times. Sunday open, pushed up, back to Sunday open, back to Sunday open, and then ended pretty much at Sunday open. So this is our Sunday open right here. So what are you going to expect for the market to come back to this level at some point throughout the week? It doesn't mean that it has to, but this is what you see. These are high probability trades, high probability setups that you see happen throughout the week, right? So like we said, we'll see it come and drop down and attract back to that Sunday open. So if you see the DXY go bullish this week, Then what are we going to look for with EU, GU, and essential whatnot, and look at them to start the week off. What do they start the week off? They continue that bullish, very strong bullish momentum from the last couple of weeks, right? Very, very strong bullish momentum. But now we see what's going on with the DXY, that these are going to be overextended and they're going to take out these highs. And then after it takes out these highs and we use our institutional levels, what do we really can potentially see happen? GU, what is this? GU might push up for like another 80 pips or so. And somewhere inside of here, if we can get a nice push up here, what are we going to do from these levels up here? Take that back to the downside, right? Take that back down, take out these lows, and start targeting all that bullish structure. But it's a matter of just being patient, because we can obviously see how bullish the market is right now. Looking at EU, same thing. Some beautiful, if you got to hold your trade from last week, shoot, these are, super profit to start the week already. It looks like it's going to be a good week in the market, right? It's going to be a volatile week. Market's going to be active. And when you see things like this, you don't get enticed to trade. This is when you get enticed to go do everything you need to do to be up at 2 o'clock in the morning, to be up at 3 o'clock in the morning. Right. This is when I see an active New York, the market is active during Asian. I get happy because that's like, okay, we know we're going to get a move for London or New York today. So let me close the computer. Let me not look at what's going on the charts, and let me just bring back and open my computer at 2 o'clock, 3 o'clock in the morning. So when people ask me why I don't like doing one-on-ones and why I have specific schedules and why I don't like getting on Zoom calls and like why, oh, it's only 10, 20 minutes. I just need to do this real quick. I don't want to even look at the chart because I'm going to be up to trade. You might not be up to trade, but I'm going to be up to trade. So I don't want to mess my bias up and mess my mental up by continuing to, look at these charts for the next, because it's like I said, it's a mental thing. You're going to look at it. You think you're going to look at the chart for just 10 minutes. You have to be real with yourself, right? Like, no. And that's why I don't want you guys looking at the charts either, and why I often decline doing Zoom calls after we get off these calls, because I don't want to keep looking at the charts until London session. I just want to pull it up at 3 o'clock, pull it up at 3:30, find my move, and close my computer back again. To be completely honest, we can not have the London session for the people in the live London calls. Realistically, we can not have the call all the way until 3:30 in the morning and still catch a move. And like I said before, I'll catch a better move than the person that was trading all night. That's been trading since 1, 2, that's been trading all night long. Been looking for the move, swearing that they see the move, and then London opens, and within 15 minutes, you get stopped out, margin called, all types of crazy things happen already. While the person that hasn't entered any trades till 3:30 is nerves are perfectly fine, not stressing about anything, saw all the crazy things happen, and now you can settle in and find your position in the market. So, like I said, I mean, today's call, honestly, was just to look at what we want to happen with the DXY. If you didn't watch that call from Friday, which, to be completely honest, I have uploaded the call on YouTube. I can see how many people view the call, and it's only got 5 views, and I've uploaded it on Friday, or 6 views or something like that. Which is, like I said, I don't mind. I'm gonna keep uploading the calls. I'll keep uploading. I'll keep doing, I'll keep doing it. We'll keep having the calls. People are either gonna get on or not. But at the end of the day, the markets don't care how many people get on or not, how many people wake up or not. The markets are gonna move. They're gonna make their moves, and it's people are gonna make money. So you just have to decide if you want to be a part of that, or what really matters, to you on a day to day. So that's like I said, if you haven't watched that call from Friday, we did a lot of back testing. We back tested all these moves from the last 2-3 weeks. We did all that back testing. So we have a good idea of what we're looking for going into this week. We can see how overextended the buys are. It's going to be hard to find a good buy position and not feel like that you're risking a lot. So this, like I said, I'm going to be stalking these sales going into this week. And if you do like some buy setups, go check out, after this call, go check out UJ, go check out UCAD, go check out whatever, other USD correlated pair that is, right? So your focus should be somewhere around the DXY going into this week, and really even just going into the month, right? So that is, I think that's everything. Like I said, hop into extra resources, hop into trading plan, make sure that you go in there and that you find just go in there and use the resources, use the trading plans, go find out about your pips, go find out, do your core. Let me drop the link to the YouTube for you guys real quick. It's right here. I don't want to go, just let me link. Oh, whatever. So let me let me go back over here. Go use your extra resources, please use your trading plans, if you want to go back and watch the videos, watch the trainings, like their trainings are great. I mean, I'm gonna say they're great. I made them, but I get a lot of good feedback about the trainings and that they help. I try to not make the trainings over 20 minutes for you guys so that you can go through and just watch them and get over it, right? So that is that
And
is
then what
that.
happens during London session between 3 to
Must be
4
Italian.
o'clock?
I don't want to hear that. And then also beat the market maker PowerPoint. Some people like the visuals. So if you like the visuals, go ahead and, there's the password to that. You can watch that as well. So that is everything for the call today, you guys. I appreciate you guys for hopping on. I'll drop the link real quick in here, or I don't even know how to get to the chat from here. Here's the link. It's in the chat. It's in the Telegram chat or the Discord, not Telegram. It's in the Discord under the Forex thing. That's where I last posted, and also the recorded webinars. So I'll drop this on YouTube again after within the next 30 minutes, 45 minutes. It should be uploaded. It's still like 5 spots. Like you guys said, I'm not promoting the live signals during the week and stuff because I mean that's not my focus during the week is trying to sign people up and doing all that type of stuff. Like, talk about it once at the beginning of the week. People want to sign up and they want to be a part of the cause, then they can be a part of it. $50 for 3 months comes out to less than $1 a session by time you get through with 3 months of live training calls. So that's that. I appreciate you guys for hopping on. And I will see you guys either for London tonight or New York in the morning. It's Sunday, so don't feel rushed to trade. Do your markups, do your studies. Tuesday, Wednesday, Thursday, Friday, we got news all week, so it's gonna be, it's gonna be a volatile week. So definitely don't feel rushed to trade. I might even sleep for London tonight, but I'll let you guys know. Probably won't. I'll probably be up either way because my body doesn't let me sleep. But that's that, you guys. I hope you guys have a great rest of your day, and I'll see you guys soon.